Hello and welcome to today's YouTube video on how to avoid inflation. Inflation is a persistent increase in the general price level of goods and services in an economy over time. It erodes the purchasing power of money and can have negative impacts on economic growth, employment, and social stability. Therefore, it is crucial to understand how to avoid inflation and protect your finances. In this video, we will explore some practical steps that you can take to avoid inflation. Let's dive in. Step 1. Understand the causes of inflation. To avoid inflation, you first need to understand what causes it. Inflation can be caused by a variety of factors, such as an increase in the money supply, an increase in demand for goods and services, and a decrease in the supply of goods and services. One of the primary drivers of inflation is an increase in the money supply. When there is more money in circulation, there is more demand for goods and services, which can lead to higher prices. This is often the case when central banks print more money, which can lead to inflation. Another cause of inflation is an increase in demand for goods and services. When demand outstrips supply, prices can increase. This can happen when the economy is booming and people have more money to spend. In this case, there is a lot of demand for goods and services, but not enough supply to meet that demand. Finally, a decrease in the supply of goods and services can also lead to inflation. This can happen when there is a shortage of raw materials, such as oil or food, which can lead to higher prices. Step 2. Monitor inflation rates. To avoid inflation, you need to keep track of inflation rates. Inflation rates can be measured using the Consumer Price Index, CPI, which tracks the prices of a basket of goods and services over time. If the CPI is increasing, it means that prices are going up and inflation is occurring. By keeping track of inflation rates, you can adjust your spending and investment strategies accordingly. For example, if you expect inflation to increase, you may want to invest in assets that are likely to increase in value, such as stocks or real estate. On the other hand, if you expect inflation to decrease, you may want to invest in assets that are likely to hold their value, such as bonds or gold. Step 3. Diversify your investments. One of the best ways to protect your finances from inflation is to diversify your investments. By investing in a variety of assets, you can reduce your risk and increase your chances of earning a return, even in times of inflation. Some assets that may perform well during inflation include stocks, real estate, commodities, and inflation-protected bonds. Stocks are often a good investment during inflation, as companies can increase their prices to keep up with rising costs. Real estate is also a good investment, as property values tend to increase during inflation. Commodities, such as gold and oil, can also increase in value during inflation, as they are often seen as a hedge against inflation. Finally, inflation-protected bonds are designed to protect investors from inflation by adjusting their payouts based on inflation rates. Step 4. Reduce your debt. One of the ways to protect your finances from inflation is to reduce your debt. Inflation can erode the value of your debt, making it more difficult to pay off over time. By reducing your debt, you can protect yourself from the effects of inflation and improve your financial stability. One strategy for reducing your debt is to pay off high-interest debt first, such as credit card debt. This will not only reduce your overall debt load but also save you money on interest payments over time. That concludes this video on how to avoid inflation. We hope that you found these strategies helpful and informative. Remember, inflation can have serious economic consequences, but by diversifying your portfolio, investing in commodities, considering inflation-protected securities, monitoring inflation indicators, and reducing debt, you can protect your savings and investments from the effects of inflation. Thank you for watching, and please don't hesitate to leave a comment or question below. And don't forget to subscribe to our channel for more informative videos on economics and finance.